Hey everyone, welcome to Financial Revelations. I am your host, David Szafranski. I did not do an episode last week because I was so upset about what was going on in Manhattan against our next president, Donald J. Trump, that I knew it would just be a Trump fest, and I didn't want to do that, although I love Donald Trump, and I'm encouraging you to vote for him because inflation will come down. Why will inflation come down? Because he is going to create cheap, reliable, repeatable, and easy energy, and that is the mother's milk for a growing and vibrant and strong economy. Without cheap energy, you cannot grow an economy. And the new Green Deal that is coming mainly from the left wing nuts is expensive energy. Windmills are so expensive. EVs, the batteries in an EV is so expensive. It's just driving up our costs. But you can call us. That's why I didn't do a podcast last week, but let's move on. 1-800-344-2534. A lot of people call us and want to find out about our money management services. You can do that. We ask everybody to fill out a little bit of paperwork before I get involved, just so we can maximize our time. You can listen to me every Thursday morning on WCRF 103.3. It's a Moody station. I think it's the second oldest Moody station in the country. It's the second biggest station in the country outside of Chicago. They have a huge listening audience, and I want you to listen not only when I'm on, but the other stuff. The morning show is great. I really love those guys. They're very creative. They're very funny. They're the funniest when I'm on, of course, because I bring out the best in people. But that's from 8 to 9 a.m. And then any questions that you have, if you'd like to get a question on the podcast, answered on the podcast, you can email Corey at epsf.com. All of this is running below me in a streamer scroller. We're going to the Amazon soon. We're going to dig a water well for an indigenous village that has no clean water to drink. We're going to deliver the gospel, leave a missionary in their village. It's an awesome thing. You can go on a trip if you want to. If you've never been to the middle of the Amazon before and you'd like to go once, you can go. You got to contact me. We kind of do a little vetting, make sure that that it's right for you, really. You know, we're far away. If you have a lot of health issues, it might not be the best place to go. Even though we have an insurance policy on everybody. Medical care in Brazil is different. In fact, medical care in any country outside of the United States is different. Is it better? No. The delivery system might be better, how you get to it. But you go to Canada where they have socialized medicine, it's horrible. If you're depressed, they'll kill you. Honestly, they will ask you if you want to be euthanized for depression. How about we treat the depression? And it's just, but if you want to go, let me know. You can donate. You can go to nativosusa.org and you can donate there if you want to. And 100% of your donation goes to the trip. There's very little administrative costs. So maybe it's like 96% of your donation goes to sending somebody. In fact, we're paying for a pastor to go, doesn't have money to go. He's going. How does he do that? Your donations. And please pray for us. That trip is coming up on us very quickly. So I wanted to give you an update on the Fed and Chair Powell. So the economy is slowing down a little bit. We're seeing the Atlanta Federal Reserve Bank. There's 12 Federal Reserve banks around the country. There's one in Cleveland. There's one in Atlanta. There's one in New York. There's one in St. Louis. San Francisco has a bank. I don't know where they're all at, but there's 12 bank presidents. They don't all vote on interest rate policy. There's kind of a round robin where they're voting members for a certain amount of time and then they're not. And that keeps going like that. So they've voted to raise interest rates. They stopped in November and December. A lot of people think they should have kept going. I'm one of those. So the economy is finally starting to slow down. But what isn't slowing down enough? That's inflation. And if you calculate inflation correctly, which includes food, gas, energy, food and energy, rent and mortgage payments, your inflation rate is around 5%. They will report it in the threes, but that's not accurate because all you have to do to know that inflation is still at 5%, that's the growth rate. That doesn't mean, so when you think about 2022 So late 2021, inflation started. We were being told it was transitory. It's going to go away. It didn't go away. It got hotter and hotter and hotter. So prices went up. Prices are up about 22% across the board. That's food, energy, rent, mortgage payments, all that stuff. And you go to the grocery store and you know that your cart, if you spend $100, your $100 is about 25% less items in your cart than when Donald Trump was president. So this is a Joe Biden problem. The administration is responsible, not 100% for inflation, but 80% of this inflation, I think, is the fault of this administration. So inflation is not coming down fast enough. But why did the Fed not raise rates in November and December when they had a chance? And I'll tell you why. This is my economics training, my years in business, my years in finance. We have a $1 trillion interest payment coming this year. We have to pay people who buy our bonds. Now, I'm one of those people who buy bonds, government bonds for our clients, because they're paying 5.3%. You don't pay state and local tax on a U.S. government treasury. So it's kind of a good deal for people in higher tax brackets. It's a good deal for anybody, really, right now, if you want to have some of your money out of the stock market. So $1 trillion. Imagine what we could do with $1 trillion steered back into our economy, to private citizens spending their money, because that's where it would go. You could afford to lower taxes if we didn't have $1 trillion of interest payments. Joe Biden and the Biden administration are creating debt at such a rapid pace that the economy can't absorb it. That's part of the inflationary problem. So if you make energy cheap, you grow the economy, you can pay down some of this debt, you're going to cut budgets. There's not going to be as much money in the government budget, and that allows you to put it back into the private sector. That's what free markets are about. In a world where you could be anything, be a free market capitalist. The other reason that they didn't raise interest rates in November and December is because of the banking crisis that they created. And beginning of 2021, they assured banks that they weren't raising interest rates, that inflation was transitory. Now, shame on the banks for doing this, but they got to buy some bonds. And so what did they buy? They bought the 10-year Treasury. The 10-year Treasury went from 1% to almost 5%. That's the banking crisis. If they keep raising rates, they just exacerbate the banking crisis that's hanging on their neck like an albatross right now. Like a dead fish just hanging there, stinking. And the more they raise rates, the more that fish stinks. The more banks that they're going to have to bail out, because banks have to report their on-book losses as if they were going to sell them today. So a lot of banks are sitting on massive losses because they bought 1% treasuries that are at 4.5 or 4.4 right now. That's the banking crisis in a nutshell. So here's what I think is going to happen. I think the Fed really does want to cut rates this year. Should they cut rates this year? Probably not. But I think that they may. Now, I was looking at the calendar the other day of Fed meetings, and I noticed in November, there's something else big happening in November. We're going to get a new president. Well, actually, the country's going to be under old management because we're going to get the old president back. And I'm hoping he's going to be a lot smarter this time. I love Donald Trump's presidency and the business acumen that he brings to the table. But I think he got duped by Fauci and Deborah Birx on COVID. I think they duped him. And I think he brought a lot of people with him early on that weren't really the best fit for a free market capitalist. And they're the old guard. They're the people that want to keep us entrenched in old politics, who love the money laundering kickback scheme of foreign policy. And if anybody doesn't think that's true, just read up on FTX and how we gave hundreds of millions, billions of dollars to Ukraine. They turned around and gave $100 million back to FTX to invest. Why would they do that? FTX then donated about $50 million to Democrats. 2 days after the election, they were indicted because they were done with them. That's the foreign policy money laundering scheme in a nutshell. So why do I think there's going to be a rate cut in November? Because I looked at the calendar and there's a Fed meeting 2 days after the presidential election on November 5th. The Fed really does want to cut rates this year. I don't think they should, but they really want to cut rates this year. And if they do it on November 7th, it's not going to look political. the last thing the Fed wants to do is be political. They already have enough haters and detractors, and some of it's very well earned, by the way. But that's when I think if there's going to be a rate cut, that's when it would happen. If Chair Powell wants to cut rates, it's going to be November 7th. So how do we handle it? What do we do? Because some assets react really well to a rate cut, others don't. So going into this market, we're going to have to be diversified. Now, there's a tendency right now, especially, to put 100% of your money into technology. NVIDIA, AMD, Micron, anything AI. If a garbage hauling company put Joey Smuckalovich's garbage pickup and AI, they probably go up 100%. We've got to fight this urge. Now, certainly, an overweighting into that area it's not unprecedented. It wouldn't be uncalled for. But here comes the big but. Don't be stupid about it. Okay? If you have more than 7 to 9% of your money in one stock and you don't protect it, I think you're making a mistake. If you buy NVIDIA and you just let it grow and grow and grow and grow and grow, and you look down one day and it's 20% of your portfolio and you haven't protected it with a trailing stop or an option, something to protect it from going to half of what it is now, I think you're making a mistake. And that's what professional money managers do. They protect things. So the big but is protect yourself. Don't put all your money in one area. Don't forget about the trade down stocks. There are some trade down stocks, they're not going to grow as much if we're in a horrible economy, but they could still grow and they could hold their value longer than some of these high flyers. And I'm thinking specifically of, and I'm not telling you to buy these stocks. It's like these companies, but a TJ Maxx, for instance. One of the things that happened in the pandemic that's interesting is that these high-end retailers could not source their product. So what did they do after the pandemic was over is they way overbought their product. Can't sell it all. It's hard to sell a $900 purse. It's hard to sell $500 shoes. And so what do? They offload their inventory because next season's coming and they need to have other stuff to keep people coming back. So they offload that stuff to the TJ Maxx's, the Marshalls, the discount stores. Those are places that I would be looking at for trade down stock. Walmart is the quintessential trade down stock. There's a grocery store not far from my office. I'm not going to name it because I don't want to disparage anybody. Well, I do like to disparage people, but I like them, so I'm not going to disparage them. When they deserve it, I will. If they do something dumb, I will. But you could go in there and get a big Chobani yogurt. It's $2 more than at Walmart. Okay, so it's $7 versus $5. Now, a lot of people say, well, what's $2? Well, don't look at it that way. Look at it as a percentage. It's 40% more expensive. Okay, so when times get tough and people are getting laid off and there are more people, unemployment is rising a little bit, they trade down. They look for cheaper alternatives. You could buy the same thing for 40% less. Why wouldn't you do it? And so I like things like that. I think that time may be coming. I also like the banks, money managers, and because they have all the money. And if interest rates fall, business picks up, banks do better. Banks do well when interest rates rise because they have more net interest margin. So the spread between what they're giving you for a 5-year CD and what they're charging on a home loan or a car loan, that's the spread. That's the net interest margin. Now, it turns out that there is a diminishing marginal rate of return on this. Economics term, meaning, think about vanilla cake, because I love vanilla cake. My first piece of vanilla cake, I'm in heaven. It's nirvana. My second piece, I like it, but not so much. My third piece of cake, I'm ready to puke. So the value that I'm getting from that is lowering every piece. With interest rates going up, it happens to banks too. They don't make quite as much money when rates get high. So if rates were to moderate to a normal level, which I think is what the Fed is going to do over the next 24 months, banks actually make a lot of money. People are getting loans. So if there is a pullback after the election, something will still win, but you got to own it now. By the time people are onto it, the value's gone. So, I was talking on the radio this morning. Somebody came to me and said, so tell me what you do for a living. And my kid was here one time when he was in like 4th grade, and they asked him the same question at school. What do your parents do for a living? And he said, my dad talks on the phone and eats M&Ms, which was probably accurate the day he was here. But that's what all of his schoolmates thought I did. I just talk on the phone and eat M&Ms and I get paid for it. Well, what I do is I make people money. So this person brings her money over, and what did I do? I immediately lost her money. We will make money. You will make money. It's over time. Sometimes you put your money into something that you know and you like it and you trust it and you believe in it, and it's got a great long-term story, but short-term, there's a little bit of pain. And that may happen a little bit after the election, because generally after the first rate cut, the stock market draws down a little bit. And that's true. But, when you think of, by the way, that the lady that I'm talking about, we've made her a lot of money over time. That's what we do. Can I guarantee that we're going to do that? No, I can't. Our track record is probably a pretty good guide on that. We've done that for a lot of people. So I want you to make money, whether it's here or any other place. I want you to make money. Think long-term when you're investing. Be diversified. Don't put too much money in any one stock. When I look at a mutual fund or an ETF, I can put more money as a percentage of my portfolio in those things because they're diversified. When you own one stock, unless it's like a Procter & Gamble or a GE in the good old days when they owned companies of varying different things, you bought GE and it was almost like owning a mutual fund. But it's not like that anymore. And most stocks aren't like that. This conglomerate stock is really not to a greater degree, doesn't exist. So buy technology, do that, do those things if it's within your risk tolerance. But diversify, own a lot of different things. And if you like it and it goes down, you're going to want to consider buying more. You want to buy when the blood's in the streets. That's how we do it. I am David Szafranski, a real American, a true red-blooded, gun-owning patriot, and the voice you can trust.